right, welcome back, everybody. Coming up a little bit later, Uber finds itself in illegal crosshairs again. Legal analyst Robert Robinson joins me with the details later in the show. All right, that's later. All right, next. So the polls are tightening on the presidential race. Hillary Clinton, who once had a comfortable lead, now finds that lead slipping. Donald Trump is leading in some swing states, leading in other states, and Hillary's lead in most of these states across the country is within the margin of error. A lot of the states you find her with just a 2% lead. So what does the polls tightening mean for stock prices and the stock market in general? Joining me at this time in studio, as he often does, is noted financial analyst and the mayor, I should say, of Laguna Niguel, California. We point that out because this is politics and profits. Joining us this time is Jerry Slusiewicz. Jerry, good to see you.
Hey, thanks for having me, Rick. All
right, so the polls are tightening. And before we get into that, I just want to say that she does have what I'll call a comfortable lead in the Electoral College, not a lead that can't be taken back. It's much more comfortable than it is in the general polls. But with those polls tightening, the stock market should be doing what, do you suppose?
Well, again, Republicans are red, Democrats are blue, money's green. So what we really care about is what's going on with the money.
I agree.
And, I'll be honest with you, a lot's going to change over the next month because, as I understand it, they're expecting 100 million people to watch the debates, which are coming up in a couple of weeks now. And I think that can make a lot of difference in it. But the stock market is going to be affected quite a bit by this tightening or potentially a Donald Trump lead, because there's a little bit more uncertainty about what he'll do immediately when he comes in. A little bit more draconian type moves by Trump over Hillary Clinton, in my opinion. She's going to probably try to continue the same. Obviously, Congress makes a big difference as well, Rick. But in my opinion, and we're starting to see that last week, the market had a pretty big hit on Friday. And I think if Trump starts to take that lead, the markets probably sell off heading into the election because of the uncertainty of what cuts he'll take immediately as the new president.
And you point out uncertainty. For our viewers out there who may not be aware, the market hates uncertainty. Now, Mark Cuban, billionaire Mark Cuban, has come out and gave an interview on Fox News in which he said that he predicts if Trump does indeed win, the market will crash because of what you say, uncertainty. Would you go that far?
Well, again, Mark Cuban, always liked his program, but he's a bit of a radical when it comes to this, and he's a known supporter of Hillary Clinton. So crash, that's a very tough word. The market is overvalued. There's no question about it. So the valuation's high to begin with, whether it's Donald Trump or Hillary Clinton. This valuation's really, really high historically and probably does need some sort of a correction out there. But I do think that with the uncertainty, there will be a faster correction, maybe a quicker correction. A crash, I start thinking 20-25% drops. I think of 1987. I don't see it crashing, but I do see a correction taking place as this race tightens or a Trump lead. 10% plus.
Okay.
Sure.
The irony is, by the way, on Mark Cuban, a very, very good friend of his is Steve Bannon, who is now the CEO of the Trump campaign. What's also interesting about this, Jerry, is when I think of Donald Trump, in my mind, I think pro-business. I think less regulation. I think someone who is more in the corner of capitalism than someone on the left. And yet the irony is, if those things are true, the market is still going to take a hit because of the uncertainty.
Well, again, Rick, this is more of a longer term. How did we get here? How much intervention do we have from the Federal Reserve? How much was this, pumped up money and things like that was sustaining the market? I do think long term, all those things about Donald Trump are true. Hillary Clinton's commercials out there are saying, hey, look, if someone wants to leave, we'll just tax the executives, give them, taking some money away when they leave, et cetera. Trump's going to try to bring business back to America, which long term is better. So I believe that if we did have a major correction, at the beginning here, long term, it's going to be a more sustainable rise after the correction under fundamentals of strong business under a Trump regime over a Hillary regime.
You know, less than a minute. What should so if you're on the sidelines, you may look to buy if Trump gets elected here, and you see that market sell off. Either way, if the market sells off, no matter who wins, there's a buying opportunity here.
Absolutely.
What if you're in the market? You sit back and write it out.
Yeah, you got to write it for a little while. Now, again, you know what you should really do is decide how much risk you're willing to take. If you start seeing things go down, don't wait. You know, have a plan ahead of time and say, okay, how much of my profit? Hopefully, you've got nice profits, politics and profits. Then you just want to protect them to some degree. To sell now on the hope or the desire or the fear that a Trump wins, don't do that. But as markets start dictating terms, you might want to say, let's take a little bit of money off the table and keep some powder dry to buy later.
All right, Jerry, we have 30 seconds, so keep it brief. Fed meeting next week about an interest rate hike. What's going to happen? No
chance that the Fed raises rates. I think they're just trying to save grace, save their own face. They said there'll be 4 rate hikes this year. They can't raise on November 1st and 2nd because it's right before the election. They don't want to wait till the end of the year. So there's some pressure that they'll raise rates. The markets say 25%. I say no way, no how.
All right, Jerry Slusiewicz, noted financial analyst. You'll be joining us a little bit later on our Triple P, the Politics and Profits panel.
Thank you, Rick.
Good info. Thanks for joining us. All right, when we come back, we'll find out why Uber's is in legal crosshairs once again with legal analyst Robert Robinson from the Bellatrix Studios. I'm Rick Amato. Stay with me. Back after this.
Hi, this is Terry Urich with your Health Assurance Minute. Prescription drug prices are up, but you may find relief in a surprising new source. New research reported by Health Affairs from a 3-year study found that states with legalized medical marijuana saw significant declines in the number of prescription drugs used for conditions like chronic pain, anxiety, and depression. A study from 2013 concluded that medical marijuana saved the Part D program about $165 million. Estimates claim that if that policy was nationalized, Medicare Part D spending in the same year would have saved $470 million. As doctors struggle with the opioid addiction, medical marijuana could provide an alternative. Currently, doctors can't technically prescribe it, so insurance plans don't cover it. But the FDA recently announced it's considering changing that classification. So next time you visit the doctor, you may get a new prescription. Take 2 hits and call me in the morning.